On today's hot sheet, I'm discussing Realtor.com's November rental report, Zillow's November market report, Fannie Mae's 5 predictions for 2025, and Zoodealio's top 10 states for cash offers over the last week. This is the hot sheet. Today is, what is today? Tuesday, December 17th. I am Byron Lazine, and the hot sheet starts now. Okay, here we go. On the hot sheet. Let me know in the live chat which market you are tuning in live from this morning. We go live every day over on the YouTube channel at Now Bam on YouTube, where we go live 9:30 on the East, 6:30 on the West. So if you only listen on Spotify or Apple to the replay, just know if you want to join the live chat and the live show, that happens over on YouTube. Subscribe to the YouTube channel for all things BAM related. The hot sheet release every single day. Every Tuesday, like later today, we'll be releasing a new Real Word podcast covering your real estate industry news. The walkthrough podcast gets posted on Thursdays, of course. Subscribe to the YouTube channel. And if you listen over on Spotify and Apple, of course, leave us a review over there. Would love that. Okay, we've got a lot going on. I mentioned yesterday, this is an action-packed week. Maybe everything's getting jammed in here before the holidays really kick off, but we've got a bunch to go over today. Just looking forward here the next couple days on the hot sheet. We have NAHB home builder survey tomorrow, mortgage applications tomorrow, housing starts tomorrow. Of course, the FOMC, the Fed meeting is kicking off today. That's going to be today and tomorrow. The press conference will be tomorrow afternoon. We come back on Thursday. We'll be breaking down everything that Jerome Powell said about housing, every mention of housing, every relation to housing in that presser. We're going to extract in the transcript, as we always do, save you an hour, and we'll go through it all on Thursday. And then you'll have those hot sheet show notes. Of course, hot sheet show notes, all of the done for you content, everything we do is available inside of BAMX. Use code HOT to get inside, to get on the BAMX platform today. Also on Thursday, we got unemployment. And then we've got some other stuff happening on Thursday that'll wrap into the Monday show. So a lot going on. Let's kick it off with a rental report here for November 2024 from Realtor.com. Rents continue for the 16th month now, month over month. 16th month of year over year rent decline. November marks the 16th month in a row for year-over-year declines on rent. There I go. I got it out. Okay. So now basically, good way to say that is almost a year and a half, about a year and basically a little more than a quarter, we've seen rents decline. Okay. The year-over-year rent continues to decline for all properties, 0 to 2 bedroom properties. Asking rents also dipped 1.1% year over year. Okay, so this is really good news. This is today's data, not the data that you see in the CPI, which is owner's equivalent rent. CPI is filled with 1 to 2 year old data on rent. Leases take a while to catch up, but what we're seeing right now in the market that we're operating in today, we're seeing rents move down. So we're seeing housing, shelter inflation from the rent side ease up. It's a big deal. Here's the figures from November, according to Realtor.com. Nationwide rent is 3.2% below the 2022 peak as well. Okay, so of course you're not going to see rents, take the tumble that the median year over year acceleration, that gray line that you see. When you just look at what the total dollar amount is, when things go up, you're not going to see milk go back to 2019 prices. It's really about that acceleration of how fast it goes up is what we needed to slow down. We've slowed that down in a big way. In fact, we're into the negatives right now. Smaller units saw larger rent declines according to Realtor.com. Okay, so studio and 1 bedroom, even larger rent declines than what you're seeing with a 2 bedroom. One of the reasons there, if you're looking for 2-bedroom, if you're looking for 3-bedroom rent, you're also somebody who might be considering home buying, purchasing a home. And we know the difference right now, the affordability difference between purchasing and renting is pushing some of those would-be buyers, also the limited inventory issues that we're seeing outside of, Florida and Texas and a couple other parts, primarily the Gulf Coast, where you do have elevated inventory, but everywhere else you don't. That consideration for, would-be buyer looking at, oh man, I can get a 2 or 3 bedroom rent for a lot less per month. I'll go do that for a year, see what happens. Okay. That's the analysis that those would-be buyers are making. National rent size by unit size here, national rents rather by unit size. The median rent right now is $1,700 in the country. Okay. You may be in a city where it's like, wow, that's low. That's what the median is right now. Okay. The rent year over year has come down 1.1%, as mentioned before. The rent change over the last 5 years across the country is up 18%. Okay. So call it, 4% a year. That actually under 4%, 3 and change a year on that rent change over the last 5 years. Studio comes in over 1,400, almost 14 and a quarter, down 1.6% year over year. And that's up 12% for the last 5 years. It's the rent change over the last 5 years. 1-bedroom now coming in at $1,585 year over year, down 1.2%, 16.4% to the positive over the last 5 years. 2-bedroom is at just under $1,900, also down 1.1% year over year, similar to the overall rent. But that one is up big, 20.2% over the last 5 years. Single family rents are really, because there's not a lot of those, a lot of competition. We've seen competition inventory being built on apartments. When you look at single family housing, which is a desirable rent option for people who are priced out of the buying market, they're able to drive a higher rent there, obviously, because you have limited competition. You also will see some of those, even catch a higher price in a rural area where you don't have a lot of rent options at all. Here are some of the, some of the markets here where we're seeing the biggest year over year change. Denver down 6.7% year over year. Memphis is down 6.2%. Nashville's down 5.6%. Austin, where you've seen a bunch of inventory come on, that's down 4.7%. San Francisco's down 4.5%. Dallas is down 4.4%. San Diego down 4.3%. These are all down, so I'll just go with the numbers. Phoenix 4.1%. Birmingham is down 3.6%, and then San Antonio 3.5%. Those are the biggest movers where you've seen the markets move down. Okay. Now there's also another report here where they're talking about the minimum wage. Okay. So they've got a report here for best cities, and I'll go actually to the hot sheet show notes. Hot sheet show notes break down everything, take out all the fluff of everything in a 24-hour period for you inside of BAMX. You can gain access to that like so many BAMX members are. Here's the report from Realtor.com. 10 markets where minimum wage workers need the highest number of hours to afford rent. Okay. So this is for dual minimum wage. So 2 minimum wage workers would need 93 work hours. So it's, you're not going to say, hey, one person's working 93. I guess you could, but you got a dual household. In Philadelphia, you would need 93 minimum wage working hours to afford rent in that market. Okay. Milwaukee, Wisconsin, you would need 86 hours per renter per week. Okay. According to that. Atlanta, you would need 84, Nashville 82, Charlotte 81, Raleigh 80 hours, Austin 79, Dallas 77, Pittsburgh 76, Boston 75. Now, minimum wage to me, like the federal minimum wage is $7.25. Okay, so that's the number that they're going off of. There's a lot of states now that have come up to say over 10 or but somewhere between 10 and 15 on minimum wage. Here's the gut punch on minimum wage. Minimum wage is for someone starting out, part-time job, summer job, or these types of things. You're really trying to get, work heading in the right directions. Minimum wage, not really designed, or, obviously you got minimum wage, people get tips, so that inflates that income there as well. Minimum wage, not really designed for, home ownership or something like that. So they're breaking it down here off of the 725 number with what it would cost to afford rent. Not sure that minimum wage is designed for, single use household living, off of, the way I think about it. I could be wrong. You could roast me in the comments for that if you'd like. But 10 markets where minimum wage workers need lowest number of hours to afford rent. Okay, Rochester, New York is 34 hours per renter per week. So per dual renter. Minneapolis is 37 work hours per dual renter per week. Denver 38, Seattle 38, Phoenix 40. So those markets right there, you can, to work, you could go less than 40 hours minimum wage and be able to afford rent, as well as Phoenix, St. Louis, Kansas City, Portland, Chicago. Chicago, surprising on the list, expensive city. Columbus and Cleveland. Okay. So there you go on that. Here are some projected conditions from Realtor.com as we move forward and continue to have projections rolling in for 25. Median asking rents are expected to decline by 0.1% year over year in 2025. So the asking rents doesn't mean that actual rents will, but asking rents, according to Realtor.com, are expected to continue to decline as we go into 2025. Good sign for inflation, as some of this lagging data might hopefully start catching up into the CPI and the other metrics that the Fed uses as they look at shelter. Combined with wage increases, further easing is anticipated for minimum wage earners. And you're seeing rental stock growth. Where's it going to increase the most? South has, by fall of 2025, is going to see an 8.9% increase since pre-pandemic. 1.5% alone in 2024. The West, 8.6% increase. They had a 1.2% increase this year alone. This is all by fall of 25. Midwest is going to have 5% rental stock growth. That's 0.9% in just this year alone. And then Northeast, 1.7% increase and 0.7% in 2024. Northeast, you could argue, needs it the most with where their inventory is on for sale. There's your rental report from Realtor.com here for the month of November, just released. Now let's go into Zillow's November 2024 market report and how they're thinking. We've seen some of their analysis for 2025. We've covered that. How are they thinking about things this week? As more data comes in, things can change, and they adjust some of these projections. Right now, Zillow is predicting that home sales are going to rise to 4.16 million in 2025. That's existing home sales, 4.16 million 2025, up from 4.06 million was where they're projecting this year to close out at, which is better than the 3.85 million we were trending just a couple months ago. This is if asterisk from Zillow, if mortgage rates decline as expected. Their decline, remember, Zillow's expected decline on mortgage rates is attainable. Okay. If we go back to where Zillow, there's their home price forecast. If we go to I'll find it here. Let me find it. Their forecast on mortgage rates. Here it is. Okay. Zillow is expecting just a gradual decline. Okay. You've seen some of the bullish ones, NAR at 5.9. Zillow's not saying you need to get there. You need to get away from these high sixes and start to experience a gradual decline, probably into that 6.5, 6.4 range that Fannie Mae is calling for. Fannie Mae and Realtor.com, Goldman Sachs in that 6.4, low sixes for Goldman Sachs, obviously. MBA's at 6.4. So I think if you have a gradual decline to there, 6.4 for MBA, 6.4 for Fannie Mae, gradual decline for what Zillow is calling for, then you could see that pop in Existing home sales from 4.06 to 4.16. Not a huge pop, not significant, but it is something. Here's the home value forecast for Zillow right now, calling for 2.2% come December 2025 on home values as we close out the year. So modest jump in home prices from Zillow based on this new report. The typical monthly mortgage payment, according to Zillow, assuming 20% down, is $1,865. That's down 3.8% from last year, but 111% higher than before the pandemic as of November 24. Home values climbed month over month in one of the 50 largest metros in November, San Jose, where they rose 0.3%. And then you had declines in the rest there. So home values fell on a monthly basis in 47 major metro areas. Two of them, I guess, were flat. The largest monthly drops were Austin, negative 1.1%, Tampa, negative 0.9%, San Antonio, Dallas, and Buffalo. Expected that to be the case, okay? As we looked at what was going to happen at the end of the year, we expected those declines. Doesn't mean you're going to end year over year. In fact, home values year over year, obviously up. This is just taking, some of that off the top there in the seasonality component to prices. You always get the lowest price in a 12-month cycle. Right now, smart, serious buyers are out there shopping right now because somebody's advised them that is the case and showed them the 20-year chart that winter brings the lowest prices in any 12-month cycle. Home values up from a year ago, 42 of the 50 largest metros. The biggest would be San Jose, New York, Providence, Hartford, and Cleveland. Okay. New listings decreased 21.6% month over month, according to Zillow on their website in November. So 1 out of 5 listings come November disappeared off the market. New listings increased by 0.6% this month. Compared to last year, new listings are 13.5% lower than pre-pandemic levels. There's your November update from Zillow. There's more data on that, as well as the charts that we extracted from that data inside of BAMX for you and your hot sheet show notes ready for you to download and take advantage of. You can get into BAMX by using code HOT today. Okay. We've got 5 predictions from Fannie Mae. More predictions continue to roll in on 2025. Speaking of predictions, this Friday over at Knowledge Brokers Podcast, separate channel. Go subscribe there if you haven't done so already. A couple weeks ago, we actually had Zillow's chief economist, Skylar Olson, on. Go check out Knowledge Brokers Podcast. We're about to break 100 episodes. Myself, Lisa Chinati, and Tom Toole. This Friday, we are going to be covering our predictions for 2024. Our predictions that we made at the beginning or the end of the end of 23, coming into 24. What predictions were we accurate on? Which ones were we inaccurate on? That's gonna be this Friday, and that'll be a fun show. And then as we kick off January, we'll do our predictions for 2025, of course. But here's Fannie Mae's predictions. Average monthly mortgage rates will decline modestly, but remain above 6%, with likely bouts of volatility. Okay, so Fannie Mae predicting above 6%, but we are going to see a decline throughout the year. They forecast the average mortgage rate to remain above 6%. Sticky inflation, parent stabilization, and job market gains have lowered market expectations for future interest rate cuts. Remember, yesterday we talked about maybe 3 in 2025 as a projection. Right now, there's going to be 8 meetings. So that means there's going to be 5 instances where the Fed doesn't do anything. As seen over the last 6 months, 10-year has oscillated greatly in stronger, weaker economic data, where 10-year today is not a fan of where the 10-year is today. We'll go over that in just a minute. Existing home sales, according number 2 projection from Fannie Mae, existing home sales remain near 30-year lows. Location, though, matters. Of course, we were talking about areas where there's more inventory, more options. You might see a bump up in sales. They forecast existing home sales to be above that number that we just saw from Zillow. They're expecting 4.25 million in 2025. Take that over the 4.16. It's an improvement of 4.8% compared to their pace of 4.06 coming in 2024, but still down 20.3% compared to 2019, the last normal market we had before COVID. The majority of mortgage holders remain locked in with an interest rate below 4%. You see there, interest rates less than 4%, still near 60%, just under 60% of mortgage holders. Okay. Over 6% now, though, you do have 15% opportunity there, obviously. And like we looked at the data, that survey from Bright, you'll see that, some of those sellers in the last 5 years, over 6%, some of those homeowners are going to be the majority of the sellers. It's actually not going to be what you might have thought with the boomers, according to that survey that we reviewed recently from Bright MLS. Sunbelt and Mountain States have the highest share of listings relative to 2019. You see this in Florida. You see this in Texas. You see this in Arizona. Okay. You see this in Tennessee. Okay. These are going to be the areas where you could see, existing home sales, have a little bump up because there's so much inventory, more options. I mean, if you go up to the Northeast, you're down 71% in Connecticut share of listings relative to 2019. You look in New York, down 43%, Jersey down 61%, Pennsylvania down 41%. It's not going to be the areas where you're going to extract a lot of sales. You don't have many options there for buyers. Okay. There's only so many sales that can happen. California's down 19%. Okay. Illinois down 60%. And then you've got others there in the West that are relatively healthy, 7%. There in Colorado and Utah. So there you go on some of those. Highest share of listings relative to 2019 continues to be Texas and Florida. New home sales, number 3 projection from Fannie Mae, will remain a bright spot in the housing market where they can be built. So if you're Northeast, boo-hoo, not going to happen for you. Continue to think Sunbelt states where the building has happened. That's where you're going to see, where we already have the inventory, that's where you're going to see more of it. And that's where you're going to see the new builds. Median sale price for a new home is now similar to that for an existing home. Okay, that gap has closed. That gap got pretty wide when we were inside of 21 and 22. That gap got pretty wide from new to existing. That gap continues to close as builders continue to make their offering, both on interest rate and on just sales price, more competitive to an existing home sale market, which is finally starting to see inventory. That's a problem for existing home sale or even, professionals that focus on primarily on existing home sales. Because if you're a buyer and you're looking brand new versus existing, and the gap's not that big on the median sale price in a given market, well, I want new. Okay. Now maybe there's a location component to that. That new's maybe a little further out than you want to be. So you're looking existing. But generally speaking, house for house, if you take location out of it, yeah, if the price is similar, I'm going to take new over used any day of the week. That gap has certainly closed here over the past year, creating an issue. If you're in a market where there's any level of new construction, become an expert in that field there to educate your clients. Single family construction is concentrated in the Sunbelt metros. You see that Florida, obviously Texas, and then the southeastern seaboard as well. Okay, number 4 prediction here from Fannie Mae: national home price growth will decelerate. Okay, home price growth has become uneven across the 100 metros. We just looked at the top 50 there with Zillow. 47 of them having declines month to month. The seasonality component there, of course, 2 were flat and 1 was up. But home price growth, according to Fannie Mae, is going to decelerate. The continued lack of inventory outside of, again, Florida and Texas. They're currently projecting year-over-year home price growth will be 3.6% in 2025, compared to the 5.8% in 2024. So still going up. They're not calling for home prices to drop. Okay, so All the bros on X can calm down, have a latte, chill out. Home prices continuing to go up in 25, just not at the same level. Multifamily housing for their fifth projection will remain in a holding pattern. These rates are obviously holding back multifamily, and there's been just an abundance, most inventory we've seen in years hit the multifamily. All right. That is your update there on the Fannie Mae's 5 projections. We'll continue to update any projections that come in for 2025. All right. Zoodealio sent over a list here for the week ending in December 13th for the top 10 metros with cash offers. Okay. Here they are. Number 1, Las Vegas. Las Vegas continues to rip and grow. Number 1 market for cash offers last week. Marietta, Georgia comes in number 2 market for cash offers. Dallas, number 3, Henderson, Nevada, and then Orlando, Florida make your top 5. 6 comes in Phoenix, Arizona. 7, Houston, Texas. Jacksonville, Florida, number 8. And Miami at 9, and 10 is Philadelphia, Pennsylvania. So you've got 3 Florida locations, you've got 2 Nevada locations, and you've got 2 Texas. So despite the fact, hey, inventory's up in a couple of those locations, 5 of those, the Texas and Florida, you're still seeing cash offers. You're still seeing investors say, hey, I want to put my money here, or retirees, of course. So there's your top 10 cash offers with Zoodealio. All BAMX members get access to the Zoodealio platform for absolutely free just by being a BAMX member. So many of you are using this to compete with iBuyers in your market, generating 4 offers for your seller instantly. And the platform helps you get more listings. Check out the platform by getting access to it completely free by becoming a BAMX member today. Use code HOT to get into BAMX today. There's your hot sheet here for this Tuesday. We'll have a Real Word pod up later on the channel here on the YouTube channel. Make sure you're subscribed, or Real Word will be on the Real Word, Spotify, and Apple, wherever you listen later on this afternoon. Final Real Word of 2024. Till then, have a great rest of your morning. And of course, toodaloo.